Brian, you co-head the Wealth Strategies Group over at Morgan Stanley Investment Management. So you meet with a lot of advisors throughout the year. What are they telling you heading into year end? What is their outlook for 2026?
Yeah, I mean, there's a lot of things that are on their mind right now. I'd say one big theme is concentration. There's a lot of concentration risk in capitalization weighted markets, and folks are looking for help with diversification, with a focus on taxes. Taxes is always a big theme for my team. Another one, of course, just as we head into year end, is philanthropy. How do we incorporate charitable giving in a tax smart way to help complement those better tax outcomes for investors?
Can you talk a little bit more about tax strategies in the wake of the One Big Beautiful Bill Act? That was one of the big themes this year, along with AI and private market assets. But that One Big Beautiful Bill Act was a big thing for folks like you, I guess.
Absolutely. I mean, last year we spent a lot of time thinking about how the Tax Cuts and Jobs Act and the sunset of so many of those provisions were going to impact investors. The One Big Beautiful Bill Act brought us a lot of clarity, and that clarity was a lot of extension or permanent extension of those provisions that we were preparing for. So now with that clarity comes planning opportunities. I don't think it negates the need for tax management and a tax focus, but it certainly made certain estate planning, philanthropy outcomes a little bit easier. Some things that advisors may want to plan for around the One Big Beautiful Bill Act, especially timely right now. There were two provisions that might incentivize charitable giving before the end of the year. We introduced a 50 basis point floor on itemized deductions, and we also reduced a cap on itemized deductions for the highest tax bracket. They only provide relief up to 35% starting in 2026. So folks may want to jump on that opportunity if they're thinking about charitable giving. 2025 might be the year to do it.
And how do you educate advisors so they bring up these type of subjects with their clients?
Yeah, so the Tax Forward Investing Center is something that we are really, really proud of and have spent a lot of time working on over the past year. It's a learning management system for financial advisors to upskill in the arena of taxes. There are continuing education courses, there are short videos, there's thought leadership and white papers, and all of our calculators. The objective of these courses is for financial advisors to learn the core foundational basics. So things like, where does tax friction come from? How do you take a look at a client's tax forms, not telling you to go become a CPA or a forensic accountant, but looking at their 1099s, looking at their W-2, looking at where the friction is coming from within their investment allocation, and then prescribing what investment solutions might be able to combat that friction. And so then through the courses, you'll learn about the tax management tools in your toolkit.
And you sit down not only with advisors to educate them, but you often sit down with their clients as well. Are their clients, as the individual investor, getting all the innovations that are coming out around taxes, or are they kind of oblivious to it?
No, I think it depends. I mean, there's obviously a broad spectrum of investors, and I would say just about everyone can benefit from incorporating tax management into their overall investment thesis. We have some folks that are just learning about how direct indexing might be able to make their asset allocation more tax efficient. We have other folks that are looking at a pending liquidity event or large private equity investments. They might be doing more active trading within their portfolio, that are looking to add extensions or leverage within their investment account and adopting long short, which is a big theme right now. And so we have folks that are all over the place with where they are, and we need to meet them where they are and help them understand ultimately what are the dollars and cents that we can put back in your pocket through tax management.
And then finally, or you could just let the machine do it, because you recently came out with a platform. This is the Tax Optimized Portfolio Solutions tool. This came out early this year. It's your TOPS tool, good acronym. So how does this affect client outcomes?
It's not a new product. It's exactly that. It's a tool. It's an optimization software that allows for us to run a transition analysis on a client's portfolio and allocate into our tax managed solutions that will best complement their financial planning outcomes. When we're looking at things like direct indexing, exchange funds, charitable giving, all of these different ways that you can defer taxes, allocating into those investment solutions can be a fairly cumbersome process. The TOPS tool helps pick apart at the lot level the client's investments and allocate them into these solutions in the most optimized fashion.
All right. Well, thanks a lot for coming on and talking about it.
My pleasure.